Case scenario number 9. This is on IFHP. This is a bit time consuming and lengthy question. Mr. Ganesha, a salaried person, has 3 houses. One in Thane, Maharashtra, second in Jaipur, Rajasthan, and third in Ratlam, Madhya Pradesh. Details of the flats or houses are as follows. Thane flat. Thane flat is 3 BHK flat purchased in April 2003 for rupees 90 lakhs. Afterwards, interior work done in 2006 after 3 years for 15 lakhs. So this will be cost of acquisition, this would be cost of improvement in case we have to calculate capital gain. Mr. Ganesha took loan of 65 lakhs for purchase of this flat in 2001 and settled the full loan in 2019. Now the flat is already purchased in 2003 and the loan is repaid fully settled in 2019. That means in the current year, financial year 22-23, there will neither be any current year interest nor will there be any 1/5 of pre-construction period interest. We will check whether this property is self-occupied or let out property. We will see. Jaipur house is the second property purchased in July 2019 for rupees 62 lakhs. This is cost of acquisition and interior work done in September 2020. That is in financial year 2021, 15 lakh rupees. 15 lakh rupees will be cost of improvement in case if we have to calculate capital gain also for this property. Loan taken for purchase of this house. Loan taken. Even for earlier flat also, Thane based flat also, loan was taken for 65 lakhs. Here the loan is taken for purchase of this house for rupees 15 lakhs in June 2019. As per interest certificate, he paid 12 lakh 500 rupees and 43 500 rupees towards principal and interest respectively. Principal amount is 12,500, interest amount is 43,500. This 12,500 would be eligible for deduction under section 80C if we were to calculate net taxable income, and he is not opting for 115 BAC. But we will see what exactly has been asked to us, and this 43,500 would be allowed as a deduction as interest under section 24 clause B. Now when was the loan taken? We don't know, but the property is purchased in 2019. That means loan must have been taken around at that time. It is given loan was taken in June 2019. 43,500 will be allowed as a deduction. If it is let out property, then fully allowed. If it is self-occupied property, then 43,500 restricted to maximum of 2 lakh rupees. During the financial year 22-23, we will see what to do with this Jaipur house. Lot of small informations are given to us. Ratlam house purchased in December 2020 for rupees 70 lakhs. 70 will be cost of acquisition. Stamp duty value is 65 lakhs. That means purchase for more than stamp duty value of 65 lakh. That means section 56 subsection 2 will not come. Income from other source chapter 56 subsection 2 clause 10 subclause B will not be applicable for this differential amount of 5 lakh. 56 subsection 2 clause 10 is applicable only if purchase for less than stamp duty value. Here we have purchase for more than stamp duty value. Who's the assessee? Ganesha, salaried person. For acquiring this house, he took a loan. All the 3 houses he has taken loan. For this house also, 40 lakh rupees is the loan amount from Canara Bank. Loan was sanctioned on 1st August 2020. Okay, he pays EMI of rupees 38,100 per month. Okay. As per interest certificate, now we need bifurcation of 38,100. We don't know out of this how much is interest. It clarifies further that as per interest certificate for previous year 22-23, he paid 60,900 and 3,96,300 towards principal and interest. If you observe, principal amount is very small, 60,900, and 396,300 is the interest portion, as compared to Jaipur house, whereby 12,500 was the principal amount and 43,500 was the interest, whereby the principal repayment was much higher than the interest amount. Here for Ratlam house is exactly the other way around. Interest component is 396,300 and principal repayment is 60,900, a smaller amount. However, this does not matter. 3 properties are given to us. Now they will create confusion. For all the 3 property, we have date of purchase, loan amount, date of loan, amount of loan, how much is repaid towards principal, how much is repaid towards interest, etc. Furthermore, particulars are given to us for Thane house, Jaipur house and Ratlam house. For Jaipur house, they are saying something in bracket April 22 to December 22. What is it? We will see. Number 1, municipal taxes paid by Mr. Ganesha. Municipal taxes will be allowed to be deducted only if the given property is LOP. If it is self-occupied property, then municipal tax is not allowed. Secondly, it is allowed only if paid by assessee Ganesha. It is paid 18574, 8090 and 6909. We will see municipal valuation per month 30,500, 6,800 per month and 7,200 for Ratlam House. Fair rent FR per month 33,000, 7,000 and 7,500. Standard rent per month again. So municipal taxes is not per month. Remaining three things are per month, per month, per month. Standard rent is 32,000, 8,000 and 7,300 respectively for three types of houses. Other details are as follows. He sold Jaipur house. Jaipur house is sold off. Jaipur house, where is it given? This Jaipur house is sold. It was purchased in July 2019 for 62 lakh, which was cost of acquisition, and 15 lakh was the cost of improvement in 2020-21 financial year. Jaipur house is sold on 1st January 2023. That means in the current year. When was it acquired? It was acquired in July 2019 and it is sold on July 2019 till 1st January 2023, sold in 1st January 2023. That means almost 3.5 years. Therefore, the period of holding is more than 2 years, more than 24 months. Therefore, it is long-term capital asset. Indexation will be applicable. We will see what to do. Further, he sold Jaipur house on 1st January 2023 for 90 lakh rupees. 90 lakh is the sale consideration, or rather full value of sale consideration, and invested 15 lakh rupees in RECL bonds, Rural Electrification Corporation bonds, issued by central government on 10th August 2023. Now, investment in RECL bonds will entitle him to claim exemption under section 54 EC, provided it is invested within 6 months from the date of sale. Date of sale is 1st January 23. Investment is made on 10th August 23, which is beyond 6 months. Since it is beyond 6 months from 1st January 23, therefore 54 EC will not be available. I hope you have understood this. But for Jaipur house, capital gain will have to calculate. Long-term capital gain it will be. Mr. Ganesha is working in Windor Exports Private Limited, Mumbai, and self-occupied Thane flat. Thane flat, out of the three property, Thane flat is self-occupied. So we will just come back here and write it down. Thane flat is self-occupied property. Therefore, whatever details are given, including municipal tax, are not required at all. Everything will be nil, nil, nil. NAV we will start with, NAV will be nil. And for this Thane property, if you see in the first paragraph given, second paragraph, that he had taken loan of 65 lakh rupees, but that loan is fully repaid in 2019. That means there will be no current year interest, nor will there be any pre-construction period interest. So Thane property income will be nil. Everything will be nil. SOP property it is, there could be either positive, there could be either negative income or no income. Here income will be nil, because income could be negative only because of interest, and interest is not there. He has no other source of income. But before that, we forgot one point. He earned salary of 22,50,350 for the previous year 22-23. Now he earned a salary, that means this is before standard deduction. From this, standard deduction will definitely be allowable in case he does not opt for 115BAC new tax regime. Eventually salary will become 22 lakh and 350. He has given Ratlam house on rent for financial year 22-23 to Mr. Pratap on a monthly rent of rupees 8,500. Ratlam house is LOP. So this third property LOP, we'll just write it down here, LOP. That means municipal tax, municipal valuation, fair rent, standard rent, everything will have to be taken into account. 8,500 per month. Assuming it is let out for full 12 months period, we will calculate the actual rent. All the details are given to us, municipal valuation, fair rent, standard rent, so we'll have to compute GAV. Everything is given on a monthly basis, so we'll calculate it out. Further, he has given Jaipur house also on rent for the period April 22 to June 22. Now Jaipur house, we just checked it out in the previous paragraph. Here Jaipur house has already been sold. When was it being sold? 1st January 23. That means during the last 3 months of the financial year. That means Jaipur house was owned by Ganesha only for the first 9 months in the current year. Now he has let it out from April 22 to June 22. That means only for 3 months. He has let out this property for 3 months to Mrs. Madhura Mahato on monthly rent of rupees 7,100. This is actual rent, monthly rent into 3 months. and it is lying vacant for the remaining period from July 22 to December 22. July 22 to December 22 would be July, August, September, October, November, December. 6 months is the vacancy period, and accordingly we will calculate vacancy loss. Vacancy loss will be actual rent for the given period multiplied by vacant period, 6 months, 7,100 per month into 6 months. We will calculate it out. So Jaipur house is also a let out property. We'll write it down here, LOP. So out of the 3 properties, Thane, Jaipur and Ratlam, only Jaipur and Ratlam are LOP and Thane house is SOP. 2 properties can be treated as SOP. Remaining all properties will be treated as DLOP if not actually let out. But here Jaipur and Ratlam house, these 2 are actually being let out. Okay, now proceeding further, we'll have to calculate it out. There is going to be a detailed computation. This is a very lengthy question. Mr. Ganesha would not like to opt for concessional tax rates available under 115 BSE. Please mark this as an important point. In case he opted for 115 BSE, then standard deduction not allowed from salary, and set off of losses from house property would not have been allowed. We will see what to do. Cost inflation indexes for the financial year 1920 is 289, 2021 it is 301, 22-23 we know pretty well it is 331. Question is over. Based on the facts of the case scenario given above, choose the most appropriate answer. I am sure we will have to calculate capital gain also on Jaipur house. Therefore, they have given cost indices. One by one we will be calculating. Question theory part comes to an end. Now jumping to 9.1. What would be the net annual value NAV of each house for the previous year 22-23? Many people contacted me for this particular question. They were getting all wrong answers, but we will calculate it out. Thane, Jaipur and Ratlam, 3 houses, we have to compute NAV. Of course, Thane house is SOP, so for Thane it will be nil, I'm sure. All the 4 options have same answers for Thane property, nil, 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 nil. So based on Thane property, we cannot jump to any conclusion. We will have to actually calculate it out. In order to calculate the GAV NAV, we have the details given here. Thane property is SOP, so Thane property NAV will be nil. Remaining details are given to us, but actual rent is given down the line. So let's just write down actual rent. Actual rent for Thane property will not be there. It will be there only for Jaipur house and Ratlam house. Here Jaipur house is given first and then Ratlam house is given. But while reading the question, here if you see the details, then Ratlam house details are given first. 8,500 is a rent, actual rent per month. So actual rent is 8,500 per month for Ratlam house, and for Jaipur house, what are the details? For Jaipur house, it is given at the rate of 7,100 per month, but it is given only for 3 months. There is a 6 months of vacancy loss. Jaipur house is given at 7,100 per month, so I'm writing down 7,100. However, there is a vacancy loss period of 6 months, which we'll have to take into account. Now I have already prepared the box type of a solution for this, whereby calculation will have to make, but I can't afford to keep referring to this page again and again. So towards the end of the page, I have created a box whereby these details are already jotted down. Now you can note down all these details. Municipal valuation starting with Jaipur property. These details will be relevant, which I am picking up from here. I have already written them down in a solution. Thane property is SOP, so first we'll finish calculating Thane property. Everything will be nil, 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 and then Jaipur house will be 6,800, 7,000, 8,000, 7,100. 6,800, 7,000, 8,000 and 7,100. You'll have to remember these details. So Thane flat, starting with Thane property, which is SOP. NAV will be nil. Interest loan is already settled in 2019, so current year interest will be nil. Therefore, property income from Thane property will be nil. Jaipur house and then Ratlam house. Starting with Jaipur house, municipal valuation is 6,800 per month. How much will it be? 6,800 into 12 months. Now, municipal valuation, fair rent, etc. and standard rent have to be taken into account for the entire year. 81,600. 81,600. I am writing it down. Fair rent is 7,000 per month. 7,000 into 12, 84,000. Why am I calculating? I could have calculated it orally also. Higher of the above two will be 84,000. Now agreed, there is a vacancy loss of 9 months, but then also these two figures have to be taken, or in fact standard rent also, all the 3 figures have to be taken into account for the entire 12 months period. Higher of the two is 84,000, but 8,000 per month is the standard rent. 12 8s are 96,000. Now lower of the two, expected rent will be lower of the above two, therefore expected rent will be 84,000. From 84,000 we will subtract vacancy loss. Expected rent is 84,000, vacancy loss will be actual rent per month into vacant period or vacancy period. 7,100 into 9 months would be 63,900. When I subtract 63,900, what am I getting? 20,100. 20,100 is the 20,100. I should have done it this way, 84,000 minus this, so this will be 20,100. And then actual rent 7,100 per month into 3 months. Alternatively, instead of multiplying it by 3 months, you can multiply it by 12 months and then reduce this vacancy loss 7,100 into 9 months. So vacancy loss to be deducted from expected rent also and actual rent also. But from actual rent you will be subtracting vacancy loss only when you are starting with actual rent for the whole year. Here we will not be doing it that way, shortcut straight away into 3 months. It will be 21,300. Higher of the above two, 20,100 or 21,300. Higher of the two is 21,300. 21,300 is our GAV. In case if expected rent was higher than expected rent minus vacancy loss, which is 20,100, if this was higher than 21,300, then we would have had to add back the vacancy loss. I have explained it to you in the class, you know the formula. Less municipal taxes paid. What is the amount of municipal tax paid? For Jaipur house, municipal tax paid is 8090. Now municipal tax, how much is allowed to be deducted? Whatever is actually paid, and the paid amount is 8090. We are not concerned with whether this 8090 is for 12 months or it is from April to December 9 months, or it is only for 3 months period. It makes no difference. Whatever is paid, it is allowed as a deduction. Even if it is paid for earlier year, then also it is allowed as a deduction. So now we'll subtract 8090 from here, municipal taxes actually paid. Balance will be 21,300 minus 8090, 13,210. NAV. We have been asked to calculate only NAV right now, but we are proceeding further and finishing it off. 13,210 minus standard deduction. Standard deduction will be 30% of 13,210, 3,963. 3,963. And there is interest also. How much is the interest for Jaipur house? Interest for Jaipur house is given where the Jaipur house details are given at the beginning of the question. Here if you see second last line, 12,500,000 is the principal amount and 43,500 is the interest. 43,500 will be allowed to be deducted. This is LOP, so entire amount will be allowed. 43,500. There will be negative income. So 13,210 minus 3,963 standard deduction, and again minus 43,500. There will be 34,253 of negative income. 34,253 negative loss. Doesn't matter, there could be loss also. Now coming to Ratlam house. For Ratlam house there is no vacancy loss. It's being let out for the entire 12 months period. However, details I have already jotted down in that solution, but you can pick up the details from here. 7,200, 7,500, 7,300, 8,500 actual rent. So municipal valuation for Ratlam house, which is LOP, 7,200 into 12 months. Compulsorily we have to take municipal valuation, fair rent and standard rent for the whole year. 7,200 per month into 12 months would be 86,400. So I'm writing it down here, 86,400. And then fair rent 7,500 per month into 12 months. 7,500 into 12, 90,000. Then higher of the above two will be your reasonable rate or reasonable rent, 90,000. 7,300 per month into 12 months is your standard rent. 7,300 into 12 would be 87,600. Lower of the two will be 87,600. And then actual rent 8,500 per month into 12 months. Of course this only will be higher. 8,500 into 12 would be 1,02,000. 1,02,000. GAV will be higher of the above two. Now here unlike Jaipur house, there is no vacancy loss. Therefore that one step is removed. I would have subtracted vacancy loss if vacancy loss was there. 1,02,000 becomes GAV because that is higher. Less municipal taxes paid. What is the municipal tax for Ratlam house? For Ratlam house municipal taxes paid is 6,909. Subtracting 6,909, the NAV would be 95,091. 95,091. Okay, and then standard deduction 30% of 95,091. Right now we are being asked to compute in question 9.1. We are being asked to compute only NAV, but we are calculating everything. 28,527. 28,527 is the standard deduction, and then interest. How much is the interest? Interest for Ratlam house is a big amount. Interest was 396,300. 60,900 is the principal, and interest amount is 396,300. So I'm jotting it down here, 396,300. Since this is an LOP, therefore entire amount will be allowed without any upper restriction. How much will be the income from Ratlam house? 1,02,000. Again negative income. Sorry, it's not 1,02,000. It is 95,091 minus 28,527 standard deduction minus 396,300 is the interest. 329,736. 329,736 negative income. So I'm putting it in bracket. If you have to take total of all three, total would be nil plus 34,253 negative 329. All the three houses combined together. $363,989. That's what I'm getting. 363,989. However, right now they've asked us to compute only the NAV. NAV for Thane house will be nil. NAV for Ratlam house will be, Jaipur house will be 13,210, and NAV for Ratlam house will be 95,091. So nil, 13,210 and 95,091. Let's check whether this is one of the answers or not. Yes, this is the first answer itself only. A, Jaipur 13,210, Ratlam 95,091. Let's check what's institute's answer. Our answer is A. Institute's answer is also A, nil, 13,210 and 95,091. Our answer is correct. Let's proceed further with 9.2. 9.2, what would be the income or loss under the head income from house property in the hands of Mr. Ganesha? So eventually, whatever we calculated, we had to calculate. We were getting loss of 363,989, D, 363,989. So let's check whether what's institute's answer. Our answer was 363,989. Institute's answer is also loss of 363,989. Our answer is correct. Now 9.3. 9.3, how much amount will be carried forward as loss from house property for the subsequent assessment year 24-25? The answer, out of this total loss of 363,989 as we just calculated, only 2 lakhs will be allowed to be set off as per section 71 subsection 3A. You know the rule, against other heads of income, and balance amount will have to be carried forward. So balance will be 163,989. B is the correct answer. Let's check what's institute's answer. Our answer is B. Institute's answer is also B, 163,989. Now 9.4. What would be the amount of capital gain chargeable to tax in hands of Ganesha during previous year 22-23? It will be long-term capital gain. It is on arising on transfer of Jaipur-based house. Now if you see the question here in the other details, Jaipur house has been sold on 1st January 2023 for rupees 90 lakh. 90 lakh is the sale consideration. 1st January 23, and since period of holding is more than 24 months, it will be long term. He has invested 15 lakh in RECL bonds, but no 50 for EC because investment has been made on 10th August 2023, which is beyond 6 months. Okay, now what are the other details of Jaipur property? Other details were given here for Jaipur house. It is purchased in July 2019, that means financial year 1920, for 62 lakh, which is cost of acquisition. And then interior work done in September 20, 15 lakh rupee will be your cost of improvement. Okay, and interest paid will not be part of cost of acquisition or cost of improvement. Only two things: cost of acquisition, cost of improvement. Cost of acquisition has been incurred in 1920 financial, and cost of improvement has been incurred in 2021. Cost of acquisition in 1920 financial year, cost of improvement in 2021. So we'll be picking up the CII number of these 2 years. Are we being provided with a CII number of 1920 and 2021? Let's check. Answer yes. 1920 it is 289 and 2021 it is 301. 62 lakh and 15 lakhs. So coming to the calculation part of capital gain from Jaipur house, full value of sale consideration is 90 lakhs as is given in the question, 90 lakh. Cost of acquisition is 62 lakh and cost of improvement is 15 lakh. 62 lakh multiplied by 331, the CII number of the current year, divided by CII number of the year of acquisition 1920, which is 289. 289. So 62 lakh divided by 289 multiplied by 331, it will be 71 lakh 1038, 71,01038. 0.06, so that will be ignoring 71 lakh 01038, 71 lakh 01038. This will be subtracting, so I'm putting it in bracket. Now cost of improvement is 15 lakh interior work done multiplied by 331 divided by CI number of the year of improvement, that is 301 2021, 301. So 15 lakh divided by 301 multiplied by 331, it will be 16,49,501.66. We'll round it off to 502. 16,49,502. 16,49,502. This again we are going to subtract. LTCG thus will be 90 lakhs minus 71 lakh 01038 minus 16 lakh 49,502. 249,460. 2,49,460. 249,460 is our LTCG, long term capital gain. Let's check whether this is one of the options or not. For 9.4, long term capital gain of 249,460, C is the correct answer according to us. Let's check what's institute's answer. Institute's answer is also C, long term capital gain of 249,460. Now 9.5. 9.5 is asking what would be the gross total income, GTI. They are not asking about NTI, net taxable income. That means chapter 6A deductions are not to be claimed. Do we have any chapter 6A deduction? Answer yes, we have under section 80C, repayment of housing loan, but that is not to be claimed. So we are not concerned with whether he is opting for 115 BAC or not. We have to calculate only GTI. However, we have salary income from which we are going to claim 50,000 standard deduction. How much will be his GTI? So three types of income he has. Number one, he has got salary income of 22,50,350 minus standard deduction 50,000 will be 22,00,350. Secondly, he has got loss from house property, and third, he has got long term capital gain 249,460. Remember this 22,50,350 salary. So his GTI will be number one, salary income 20,50,350 minus IFHP loss, which was 363 something, but only 2 lakh up to 2 lakh is allowed as per section 71(3)(a), and then LTCG 249,460. This IFHP loss can be set off against salary income also, can be set off against LTCG also, but against which income we are setting off, that is immaterial. How much will be the net income, gross total income? 20,50,350 minus 2 lakhs IFHP loss set off plus 249,460 LTCG, 20,99,810. 20,99,810. Let's check whether this is one of the answers or not. Yes, B is the answer. 20,99,810. Let's check what's institute's answer. Institute's answer is also, institute's answer is 22,49,810. Let me check. We must have made some mistake. Yes, we have made this mistake. Salary income is 22,50,350. The answer should be 22,50,000. 22,00,350. It should be 22,00,350. Okay, minus is 2 lakh. So correct answer would be 22,99,810. 2299. See, this kind of mistakes do take place. 2299,810. My calculation error. 2249. Again, I must have made some mistake. Let me calculate it again. 22,00,350 minus 2 lakhs plus 249,460. 2249,810 and not 2299. 2249,810. Please be a little careful. These kind of mistakes do happen. 2249,810. That's a correct answer. B is not the correct answer. Correct answer is C, 2249,810. With that, this case scenario 9 comes to an end. See you in the next video with case scenario 10.